What's up, everybody? What's going on? How you guys all doing today? Hope you enjoyed your weekend. What's up? What's up? Welcome to the True Trading Group live stream, folks. My name is Michael Edward, former award-winning hedge fund trader and now the head trader at the fastest growing and highest rated online premium trading educational platform and community where we all share the same goal, and that is to learn, trade, and profit together. Welcome to the True Trading Group live stream, folks. Before we get the stream started, I do want to give a huge thanks to our partners over at Benzinga. The support you guys continue to show us is amazing, and it's not something that we take lightly. And again, thank you so much for the endorsement from our partners over at Benzinga. Guys, if you have not done so already, make sure to give Benzinga a follow on Twitter. Their Twitter handle is at Benzinga, at BENZINGA. There you have the endorsement, folks. Quote, to better serve our Benzinga community, we partnered up with the education team over at True Trading Group. If you're looking for great lessons and a fantastic community, we recommend checking them out. Sincerely, Luke Jacoby, host of Benzinga Power Hour. Thank you so much, guys. Our partners over at Benzinga, you guys are amazing. Thank you so much for that endorsement. Okay. Again, guys, welcome to the True Trading Group live stream, folks. 6 nights a week, we go live for free, Sunday through Friday, right here on this YouTube channel, where myself, other TC Pro traders, and some awesome special guests will drop golden nuggets and lessons that can help you to become a better trader. If you're ready to learn, trade, and profit for real, you folks have come to the right place. Take a moment right now, smash that like button, subscribe to the channel. Make sure you also share this stream on your own social media. We're live right now on YouTube, Facebook, Twitter, and Twitch. Welcome everyone that is joining me on the different media networks. Folks, why should you listen to anything that I'm going to talk to you about here today on this live stream? And I've got a really great and exciting live stream I'm going to be going over with you. I have a lot to talk about here today that can help you guys make some money this week. All right. But I didn't figure this stuff out on my own. Okay. I wasn't sitting in my mother's basement for 3 years and I figured out this thing called the stock market. I began my trading career working for a hedge fund in New York City. It's my very first job out of college, 2007. Then 2008 happened, which was the Great Recession, the housing market crisis, the stock market crash. But it was actually during that time period in 2008 when I received one of the firm's Trader of the Year awards. But before they ever let me touch $1 of their money, I first had to go through their educational training program, and I had access to some of the top trading tools on the market, and I was part of a community of like-minded traders, and that helped ensure my success as a trader. And folks, that is exactly what the True Trading Group platform is based on. Tonight's live stream is going to go down as follows. Okay, first, I'm going to be doing a brief, like 15-minute Q&A. We're just going to give some time for people to log on and join us because, like I said, I've got a lot I want to unpack with you guys here today. Don't be shy. Don't feel like your question is stupid. There's no such thing as a stupid question. I've been doing this now going on 17 years, but I also had a day one. Okay, and if I didn't have somebody I can ask questions, believe me, I wouldn't be where I'm at here today. So ask questions. Then I'm going to be bringing on one of the main voices of Ape Nation, none other than my boy Matt Kohrs himself, to discuss AMC, and we're going to be talking about the overall markets. We made new all-time highs last week. Where do we see the markets going next week? Then I'm also going to be covering my strategy and game plan for how I intend on making money this week in the markets. And I'm going to be talking to you guys about one of the biggest mistakes that I see beginner traders make. Okay, so like I said, we have a lot to unpack. We have a lot to go over here today. So without any further ado, let's start that Q&A session. Start typing your questions in chat right now. You guys literally I'm sitting here telling you, ask me anything that you want. Start typing your questions right now. And I will say this, I will ask that you keep the topics other than AMC, okay? Because when I bring Matt on, him and I are going to dive into AMC. You're going to get both of our perspectives on that setup, on that trade, what you guys do, where we think, kind of we are in the timeline of this entire situation with AMC. So I will ask you during the Q&A, hold your AMC questions for when I bring Matt on, and then him and I will take your questions about AMC together. So for now, let's keep it to other stocks or general markets or general trading questions. I'm here to answer your questions. So let's go ahead, guys. Let's start that Q&A. All right, let's do it. Let's do it. Let's do it. How to grow small account into large account. Okay, Bunty, Now, listen, a couple things I can talk to you probably for the next 2 hours about this one topic. I've actually done a 2-hour long workshop with all of my TG members that's in the video library for everyone to go check out. I did an entire workshop on exactly this, how to grow a small account. There's a lot of different things that I would want to talk to you about, but I'm just going to hit on a couple of really important points. First and foremost, the way that I have seen the majority of traders grow a small account into a large account is not by swinging for the fences and doing these crazy type of trades where you're risking some huge amount. You're doing some really huge risk type of trade to try to double or triple your account very quickly. Okay, that is not the way that I have typically seen traders grow their small account. Okay, it's not. A lot of traders will YOLO their entire accounts into one trade, usually some really high volatile trade that is a good way for you to blow that account up. I think that traders, when you're first getting started, I think that it's a lot more important that you work on building that account up slowly and not take huge risk situations where you're going to find yourself in a situation where if you have a $500 account, you end up losing, $250 of that in one trade because you kind of went on a high risk reward trade, and you end up losing half of your account. When you are starting with a small account, it is way more important for you to protect that capital. Okay, protect that capital, grow it slowly. Traders that I've seen, and we have many traders in True Trading Group that have gone from, $200, $300, $500 accounts, and they've worked them now up to 5-figure accounts. But it's not from turning 500 into 1,000 in one trade, and then 1,000 to 2,000 in one trade, and so on and so on. Thereby turning 500 into 550, 550 into 620, 620 into 700, 700 into 800, and so on and so on. So I would advise you to, keep that mindset and not focus so much on the making money aspect when you're trading in a small account. Focus on establishing good core fundamentals and sound trading strategies and rules and discipline that'll help you once you actually get that account bigger. Because the last thing you want to do is, get lucky on a small account. Now you've got a couple $1,000, but you've got really bad habits, and then all you're going to do is give all that money right back because you have not built the core discipline and strategies that you should be that can help you be consistent over the long haul. Okay. The other thing that I would tell you to do is learn options. Okay. Learn options. Don't just YOLO your account into options. Learn them. Okay. Learn them. Options are a fantastic way for traders with small accounts to get leverage on their money. Okay. It's a fantastic way for them to get leverage on their money. And it's a way for you to be able to trade things that you don't have the capital to trade. So, you're not going to have the capital if you have a small account. You're not going to have the capital to trade something like the SPY. You're not going to have the capital to trade something like Microsoft or Roku or Disney or Boeing or any one of those stocks, or even an AMC. So, but by trading an option, you could. So you can actually have control over the same, 100 shares for a fraction of the money that you would if you were buying the stock itself. So a couple of things that I would tell you about growing a small account would be to, just be careful with the risk. Understand that the majority of traders that I've seen grow small accounts into large accounts was not done by these YOLO trades. They were done methodically and over time. And I would tell you to also learn options. Okay, so, but like I said, we can talk probably for another hour or two on this topic alone. I would recommend anyone that is a member of TTG, you guys, I would definitely say go and check out that that section in the video library where I did a whole entire workshop on how to grow a small account. What are your thoughts on space as a swing long-term play? Man, John, I'm actually blown away by space. I really am. I'm actually blown away by space. Let's actually pull the charts up real quick and I'll just walk you guys through this. Okay, I'm actually blown away here at space. We are going up here and testing all-time highs. Your all-time highs are just over 60. You're gonna have a lot of resistance up over 60, but the FAA gave them clearance for their commercial flights or the civilian flights to space. That news on Friday sent this thing absolutely soaring out of control. This thing was an absolute monster on Friday. You know, I think that, like, I think all space, I think the space sector, I think it's a good long-term investment, but I think it's a very long-term investment. I do think the hype on this, on Virgin Galactic, I do think that will kind of settle down a little bit. Okay, I do think this will settle down a little bit, because I just think that the hype is way too far ahead of the actual fundamentals behind the company. So I do think the hype will settle down a little bit, but I think that anything in space related, like, you know, SpaceX, obviously with Elon Musk and SpaceX, you got Blue Origin with Jeff Bezos, you got Virgin Galactic. You know, so I like all three of those companies. Virgin Galactic's the only one that's public right now, but I do expect SpaceX maybe, or SpaceX might spin off a piece of their business and actually take that public. But Elon Musk said he might want to keep SpaceX private, but we'll see. But, you know, I'm actually pretty bullish on anything space related, but I think it's just really far down the road until these valuations or the fundamentals can catch up to some of the hype. It's a very, very sexy sector, but I think it will take some time for these companies to kind of grow into the hype and the valuations that surrounds them. But I do like it for a long term. Nice. Yeah, it's very true. Sean, good point. Really good point. You know, we have the red to green course, the red to green classes that we do. Okay, we do these red to green courses or red to green workshops every month. We have our members that are struggling. We have about 80% of our members are successful, 20% of our members are struggling. But in Two Trading Group, we leave no trader behind. I'll shoot you guys straight. I don't blow smoke up your ass. Okay. Okay. So we leave no trader behind in True Trading Group. So we have all of our members that are struggling. They submit us questions that they're struggling with, topics or lessons that they need help with, topics or questions that we need help with. And me and the moderators, we cover all of those topics and lessons live in the chat. We record it and then we load it up into the video library. So the video library, just like how we have the lessons and the topics on how to grow a small account. There's so many other things in there, but the Red to Green workshops are also on the video library. And there's a lot of things in the Red to Green workshop as far as risk management and you know, setup identification and you know, tier trading strategy. There's so many different things that are in there that you guys can check out in the video library. When you first started learning to trade at the firm, did you hit a point in the beginning of hesitation to get into trades? If so, what were some strategies to help with that hesitation? Okay, so Toby, actually me, I didn't really have hesitation. I was the opposite in the very beginning of my career. I was a cowboy. I was a gunslinger. In the beginning of my career. In the beginning of my career, I was never shy. I was never apprehensive. I never second guessed. I was never scared. I never hesitated. But to a fault, I was way too aggressive when I was younger in my career, and I never had a problem hitting big wins. Okay, I would have a lot of big wins, but I also had very big losses. I was a cowboy. My risk management was all over the place. I was not disciplined. I had a lot of success early on in my career, receiving one of the Trader of the Year awards in 2008. And that kind of led to a little bit of arrogance. And I was kind of cocky and I always felt like I can't be wrong. And I felt like I was always right. And, you know, I was the exact opposite of the trader that I am here now today. If you ask any one of my teaching members, they'll tell you probably, I think everyone will agree with me. I think some of my best traits and my strengths as a trader is my patience and my discipline. My risk management, I think, is is unmatched, honestly. It's very, very, very rare that I ever really get hurt in a trade, but I was not always like that. It took many, many, many years for me to kind of build that discipline and patience that I now have today. I wouldn't have survived if I didn't change, honestly, because I was just too much of a cowboy. I would just take too much risk on certain trades, and I was just irresponsible. So I was the exact opposite. But if you are struggling with that, some advice that I give people is, in order for you to stop second guessing yourself, in order for you to remove that little bit of hesitation, it could be a couple of different things. One, it could be PTSD from, losing a bunch of money in the past, and you're scared to lose money or continue to lose money. And that's a very real thing. People kind of laugh and think that I'm joking around when I say that, but that's a very real thing. If you lost, a lot of money very quickly, that's a traumatizing event. It's a traumatizing event it's like, getting mugged on the street and someone takes your wallet and your watch or your jewelry. That's a traumatizing event. When you lose that much money that quickly, it's traumatizing. And it can cause people to be scared. It can cause people to be very hesitant to pull the trigger, and they start to second guess themselves. So I advise that everyone that really struggles with this, go on the trade simulator. Okay, like we have a simulator where you can trade stocks and options with fake money, with real-time data. Use it, because the best way for you to remove that hesitation is to build confidence. You hesitate because you lack confidence. Your confidence is low. So we've got to get your confidence up so you can start pulling the trigger faster without hesitation. So what I advise people to do is trade on the simulator, have a couple of winning trades, because the better that you do on the simulator, the more that confidence is going to start to grow. Okay, and make sure that you go through all of the courses, pass all the quizzes, because confidence also comes with how well do you understand the material. It's like if you were in college and you have your final exam, it's like, when you sit down to take the final exam, if you know the material like the back of your hand, you're not nervous for the test. Like the night before, they're like, hey man, you nervous for the test tomorrow? You're like, not really, because you know the material. You're confident in the information that's going to be on the test. But if you didn't study and you didn't pay attention throughout the semester, you are going to be nervous because you don't know the material that well. And if that's the case with you as a trader, if you have not gone through any of the courses, if you've never learned what to do or how to do it, then yeah, you should lack confidence, because how can you be confident about something that you don't know? So my advice to you is make sure you go through all of the courses, get yourself an education, and then use this simulator to prove to yourself that you can have some success. All right, folks. I think that just about does it. I think that just about wraps it up there for the Q&A section of our live stream. We gave plenty of time for people to come on and to join me. So let me see here. Okay, so all right, that's good. All right, yeah, we're done with the Q&A. All right, so guys, what I want to do here right now is I want to move on to the next section of the live stream, which is the live stream that I'm sure that many of you have been waiting for. But I want to go on and I want to introduce my guest here tonight, guys, one of the primary leading voices of Ape Nation. Everybody give a big, warm TTG welcome to my boy, Matt Kohrs.
Hey, what's going on? Super happy to be here. What's going on, Mike? I appreciate this opportunity to talk not only about AMC, but the overall market. But really, before we get into that, I just want to reiterate that advice you were just giving about like kind of the psychology of it, and like it's never bad to use a paper account. I love that advice. That is so good to start off with. I mean, and it's weird because it has those like psychology implications, and like, I don't know, like you always want to start with actual money, but like take it from me, take it from Mike. I mean, I could have saved myself thousands of dollars of blowing up with like my initial accounts if I just like, I don't know, like controlled my own hubris, my own ego, and like started off a little bit more reasonably.
Hell yeah, man. Yeah, it's so many. You know what it is like? I feel like so many people, especially when they're first starting out, they almost feel like embarrassed to use a simulator, or they feel like, they feel like it's so beneath them, or it's like people don't want to use a simulator because they're in such a rush to make money. But I've got to tell you, the people that I see that get involved in the markets, and that are in such a rush to make money. Like right now, I've got to double my account. I want to make a bunch of money, but don't actually know what they're doing. Those are the people that end up going and blowing up their accounts. And that's why I'm like, there's no rush. Like the stock market's not going anywhere. You don't have to feel like, oh my God, the market's going to close in a month and I only have 1 month to make a bunch of money. I've got to make as much as I can in the next month. No, take your time, learn. Okay, because if you don't learn first, if you don't trade on the simulator, if you can't make money on a simulator, why would you start trading with real money? Prove to yourself that you can actually make money on a simulator first. Make the mistakes that you're going to make as a beginner. Make it with fake money, so you can learn all of these. You can learn all of these things in the very beginning instead of having to worry about learning through experience, which could be a very costly one. So. I always think that beginners, or even if you're not a beginner trader, but if you're just someone that's still not profitable, trade on a simulator.
Mm-hmm. Yeah, and like I'll be the first to admit that there is a little bit of a different, mental thing going on when you're playing with real money. Like I get, like it's close and it's better than nothing, but there is still like a little bit of a bridge to jump when you're like, okay, like this is actual money. But just to learn the mechanics, like you were referencing options, it's good to know how to place it, how to get the trades off if you're doing spreads. Like it's good, like mess around when you're just like slinging. And we're gonna both admit that it's not perfect. Like you're not gonna get exactly that trader mentality that you're gonna want. But it's going to save you some money. At least in my experience, a lot of my other friends who trade, like we all kind of admit that across the board, that we wish we started off like a bit more calm.
Yeah, for sure. Definitely. Yeah, I was the same way. Like I was before you came on, I was kind of telling people about like when I first started trading, I was all over the place, man. I was a gunslinging cowboy when I was, very early in my career. So I wish that I was able to go back in time, and I wish I was able to hit the brakes a little bit sooner in my career, because things maybe would have worked out better, faster. But
yeah, we're kind of in an interesting situation where, like, I'm sure a lot of the people listening right now, they've come out of the gate like more than gunslinging. They're like, this is my first trade, and they might be potentially up massive on AMC right now. And with that, please understand, folks, that's step one. It's one thing to get a gain, but chapter 2 is capital preservation. You don't want to let that newfound money disappear. You want to you got to protect it. You want to grow it on to the next and next and next thing. That's the whole game of trading. So like step 1, great, we're making money, and hopefully AMC, GME, or whatever you're trading, I want you to continue to make money, but step 2 is to not lose that money. Exactly.
I feel like a lot of people, it's like when they hit something as big as a GME or an AMC, I tell all those people, especially the people that are brand new, it's like, okay, now it's like you had your welcoming party to the markets, and now you're excited, and now it's like it's great that, because so many first-time traders and investors got into the markets because of GameStop and AMC. Like you have their shareholders or people that hold options in AMC or GameStop that have never owned any other stock a day in their lives. And that's an amazing thing. And I love this movement in social media and having all of this attention, all this retail trader presence. But now it's like all of those people that came to the markets, you made so much money on GameStop and AMC. Now, be smart. Be smart with that money. Like actually, let's talk about maybe like investing into a long-term portfolio. Let's talk about, like actually getting an education and getting more informed on what's going on in the overall markets, because it's like, okay, once you make your money in GameStop or once you make your money in AMC, what's next? It's like I said, capital preservation. That's a really, really good point, man, that you just brought up. Really good point.
So I guess speaking of that, like for a little bit of like the action, what are you thinking about kind of both? Let's just start it off with AMC, but like I'm excited because like obviously you have like a whole host of just knowledge and really just truly experience, which you can't discount in trading. So, I mean, I know my gut instinct, but like, what are you seeing in the chart right now when you look at AMC? Like, I know like previously we've seen some insanity, but like right now, if you're just checking it out for the past like, especially for the newer apes. Like, and I'm asking this, I guess, kind of, I don't know, in a weird way, because there's older apes who've been in this, who they're sitting pretty right now. They're in sub $14 and they're like, hey, this is huge. Like, it's easy for me. But I'm getting even a lot of it in social media of like the newer apes of like, man, maybe I got in a little close. Maybe I'm a little bit up, a little bit down. But like, if you're reading this chart and just the action, what would you be saying to them?
All right. So right now, what I see right now in AMC so far, I see a lot more bullish signs in AMC than I see anything that's bearish. And what I'm looking at here on AMC is we had this wild run. Okay, this was just absolutely a chaotic explosion where this thing went from $10 to $70 in just a matter of a couple weeks. And typically, when you have such a wild move like that, if the move is finished, you get a deeper pullback. You do not get this lengthy of a consolidation. And that's why the fact that AMC is consolidating, and that's what it's doing right now, it's consolidating. And everyone needs to understand consolidation is healthy. Consolidation is healthy. It allows anyone that wants to get out, it allows them to get out. And like you said, Matt, you're getting a bunch of questions from new apes. I get a bunch of questions from people about AMC, like, hey, should I buy? Should I buy now? Should I do? And you have so many new, like you said, new apes that are coming to this table. And that's exactly what consolidation is. Anybody that wants to sell out of their position, that owns it from 10, 11, 12, 18, 20, whatever, they're doing so. And all these new people stepping in, they're buying it in here in this consolidating. You're getting this shares exchanging hands in this range. And I see a couple of things here on AMC. I see a couple of things here. One, we have a very clear channel that has been formed in between like 64, 65 top resistance and like 52 support on the bottom end. And I'm actually going to change to a 15-minute chart just so people can see this a little bit more clearly. I'm going to draw these lines out more defined so everybody sees exactly what I'm referring to. Here's the top end of your channel. The top end of your channel has this double top here right at 64, 65. The bottom end of your channel, you got this support level down here at 52. Okay, there's your support level down there at 52. You can also see it was previously resistance. Prior to that, it was support. For those that are brand new, support when broken often becomes resistance. Same thing, resistance once broken often becomes support. And you see that happening here at the 52 level on AMC. You see support, then resistance, then support once again, and now you have this new channel. So this consolidation, this channel, I think that's very healthy. I think that's very healthy for AMC. Okay, and now the other thing that I just like to take notice here is you have a real nice wedge or bull flag starting to form on the chart. And that is something that I think looks very, very enticing. Okay, this is something that looks very, very enticing. And this is a textbook bull flag pattern. And now you have a couple of things that are working in our favor. So you have, here's the flagpole. Okay, so those that are brand new, bull flags are very, very common chart patterns. They're one of the patterns that you'll probably learn first just from going online and Googling chart patterns. The reason why it's called a bull flag, because it literally looks like a flag. Okay, you have the flagpole, which is this big move higher, and then the consolidation is the flag. That is what I'm seeing on AMC. All right, and now that we have also this bottom end of the channel of support at 52, now that we also have that in play, you would look for a break out of this flag that would also break you out of the 64, 65 channel. So you will have, once AMC gets over 64, 65, folks, you not only have a break out of a channel, which is a bullish chart signal, you also have a breakout of a bull flag, which is another bullish chart signal. So this consolidation right now that I'm seeing on AMC, I read it as very bullish.
Yeah, I mean, this has been kind of my life recently, and I just wanted to make sure it was like my own validity check of like, okay, I'm reading the chart right. Because like, man, it's weird for me in the sense I've been trading now for a decade, and I would say very heavily like the past 3 or 4 years. And just even in that time period, like I'll be one of the first to admit, this is not what we're dealing right now, AMC and GME, this is not a normal trading strategy. So I kind of want to get your opinion psychologically, emotionally of like, how are professional traders viewing this? Because I look at it as like, no, this is insane. Like folks, if you're listening right now, you cannot go shopping around for the highest short interest and think that that's going to explode. That's not how this market works. That's what makes AMC and GME so special. Like statistically, it's beyond a black swan event. So I just want to make that very clear. We are not here arguing, oh, fundamentally, this is a realistic movement for AMC. I don't think many people in this community are arguing for that. It's more of like, it has very little to do with the actual stock market, and it's like a cat and mouse game between like a huge amount of retail in excess of 4 million like individual owners versus Wall Street. And like, I mean, I've never seen it, but like maybe that's not the best anecdotal thing because I haven't been trading for that long. But like, this is just insanity playing out on the stock market. And I'm just curious, with your background in Wall Street, what do you think is like the thought process going through professionals' heads or a hedge fund's head of like because it in my opinion this has never been seen before.
Yeah, I think in order kind of to unpack that question, we've got to separate the professionals and Wall Street into two different baskets. And because the people that you have on, like, let's say for example, when you have contributors on CNBC, when they're talking about AMC, they always make jokes about the share price. They always make jokes about the valuation, and they make jokes about the fundamentals. They always make these jokes about AMC. And most of the people that they have on there, they are longer term, like 3 to 5 year outlook type of portfolio asset managers that will invest based on fundamentals.
Mhm.
Those professionals, I don't think those professionals are anywhere near AMC. They're not trading it, they're not investing in it, they're not shorting it. I just think they're completely staying away from it because to them it doesn't make sense.
Mhm.
The other side of Wall Street, which are the more active traders, like the fund that I used to work at, we were a neutral long short, mostly equity fund. We also had some options hedging in there as well, but we were neutral long short, meaning we are free to buy and short anything that we see fit. You have other hedge funds that have like long only mandates where like they don't short anything no matter the situation. They just don't do it. It's just not part of their investment strategy that they like put out in their prospectus that they give out to all of their investors. So those professional traders, they are all over this thing because all they care about is volatility. Like you have professional traders and you've got hedge fund guys and you've got people in here that are really, really playing this game, because I think that the active trading side, like the hedge fund community, and guys, don't make no mistake about it, 100% you have hedge fund traders, Goldman Sachs traders, like they are on Reddit, they are on Twitter, they are commenting, they're fueling part of the discussion because they're in these trades too. And the only difference is that Ape Nation and like that following of retail traders, they're a buy and hold mentality. The professionals, they'll go long AMC, then they'll go short the next day, then they'll go long, and then they'll go short, and they'll just keep playing both sides of it until they can try to squeeze out one side of the trade. Like, so I think that you do have a lot of professionals that are in there, but they don't care about the fundamentals. They're just focusing on the price action. And it's an opportunity for them. It's a vehicle that has volatility where they can make money. The people that are like really focused on longer term investment and on fundamentals, they're just completely staying away from it because it doesn't make sense to them. But it doesn't have to make sense. It doesn't. It really doesn't have to make sense. Like, does it have to make sense why the AMC went from 12 to 70? No, it doesn't have to make sense. It doesn't. In order for people to make money and identify the opportunity. So the people that are more active, they're in there. I'm telling you, I know they're in there for a fact. I know you have Goldman Sachs people and hedge fund people that are in like a Wall Street Bets community, under an alias or whatever. I know it. Like it's happening. It's like they are part of this game, man. They are part of this game, and it's a hell of a lot of fun.
Do you think that they look at it exclusively like, oh, okay, high volatility, good money making opportunity? Or do you think it's gotten to the next level where like it's so much volatility, we could take out a competitor? Do you think it's like at that level of extreme moves?
Wow. Yes. So I think that you have, because very large short positions, it's hard to keep that a secret in the hedge fund community. It's hard to keep it a secret. And there are, I mean, I don't know if anybody on here has watched the show Billions. One of my favorite shows, obviously, for obvious reasons. But some of the things that go on that show are not mischaracterizations of that environment. And it is very possible to have situations where you can have one house or one firm or fund that is really leveraged to the teeth, and they're stuck in a short. And you might have word gets out that they're looking for someone to take a block of stock off of them that it can cover their position. And you might have 2 or 3 different funds kind of step in if there's bad blood between those hedge fund managers, and they try to come in and they try to squeeze them out and put them out of business. It does happen. Like, if you guys remember Herbalife, you remember Herbalife with Bill Ackman and Carl Icahn, like that type of thing. Like, that's exactly what that was. Like, that was literally like Ackman and Icahn really like going to war against each other. And it happens, it does happen. It doesn't happen often, but if it was ever going to happen, it's got to be on something like an AMC. And honestly, Herbalife was like a meme stock before meme stocks were a thing. It was like it was talked about all over the place because it was a well-known company and brand that everybody knew. And it was this battle amongst hedge fund titans. One was extremely long, the other was extremely short. So it's something that definitely does take place. And I do think you probably have some of that going on in AMC, because you're sure as hell definitely had that be going on in GameStop.
Yeah. For this, particularly this upcoming week, man, I'm so torn of what could potentially happen, just because right now, like, I was just making a video earlier about F9, the Fast and Furious, the ninth one. It broke a pandemic record for just the box office. And so 70 million in the US opening weekend. We're at 405 in total because it opened up like out of the US a couple weeks ago. So right there, like, I fully understand that doesn't really change the fundamentals of AMC, but it provides like an enthusiastic catalyst for the retail traders, who in this situation are the match, and then the big money other hedge funds, like let's quote unquote the friendly hedge funds, are more of the gasoline in this situation. Because right there, like, what we need is, we don't need something that represents the buying to like shoot this guy high. What we need is to push the snowball like right off the cliff. And in this situation, that's just a little breakout of 60, 62, 65. Like, it's just like we're fighting and the wedge is getting closer and closer. And then if we test and break the current all-time high of 72 on intraday, like, I think it's just going to be a flood of FOMO buying, which leads then to potentially a gamma squeeze, potentially a short squeeze, depending on what's going on. But man, like, we're right there and we just need it right over. But on the other side, just so everyone knows, like, we are heading into the 4th of July weekend, and that's notoriously just a lower volume volatility environment. And we do have a full week that could also break out on the wedge. So I'm in no way saying anything bearish. I'm just saying, hey, the way we've seen volume kind of die off and volatility, there is a theoretical reason, like, if I'm being completely honest, is we just see that heading into holidays. People are on summer vacation. It's really 2 summers since people have gone out and done anything with their lives. 4th of July might be the first time they're seeing friends or family for that first big barbecue if they didn't do it on Memorial Day. So I'm kind of torn where I'm like, okay, like, I see the scenario in which we could see a major technical breakout that leads to a huge explosion, but I could also see the wedge building out kind of quietly just because of the holidays and it's summer, and that's what stock markets do. They go on vacation on the Hamptons, so big money isn't bullying the market up or down.
Yeah. That's a really good point. And as you bring that point up, I'm gonna extend the volume bars down here just so everyone can see them a little bit bigger. And exactly to Matt's point, guys, you see how the volume has been just decreasing in AMC over the last couple of days. So right, exactly to Matt's point, like, getting into summer, and I think he's spot on. Kind of talking about the seasonality of the markets and just that lower volume type of consolidation. So yeah, definitely possible that you could get this bullish pennant that kind of just extends itself out a little bit further. But going back to like Fast and Furious 9, So I actually did a live stream the week. It was Friday after, excuse me, it was Friday prior to when Cruella and what was that other movie? It was
Quiet
and A
Place
Quiet
2.
Place Too. Yeah, and we talked about this, right? And it was like that box office weekend was blockbuster. You know, it was fantastic, and you actually saw AMC for the next couple of days. You did have some buying pressure that stepped in there. Now, was it coincidental or not? You know, I don't know, because we were still kind of in like the first wave of hype or second wave of hype in AMC, and that volatility was still there. But we did have some buying pressure come in off of that, and you know, I think that it might not change the book value fundamentals of AMC, but it gives shareholders something to be excited about. And that is what this whole trade and movement is about. It's about excitement. It's about enthusiasm. You know, it's about hype. It's about, you know, and I think that anything that could say, oh, wow, you know, that's it. Movies are back. People are going back to the theater. That's good for AMC. I got to buy this thing. You know, I think enthusiasm just bodes well. So I think, you know, it certainly can't do any harm. I think if anything, it might give us a little bit of a boost tomorrow. So it'll be interesting to see. We're also really close to that bottom end of the channel for that support level. So maybe you had a nice bounce off that support level, and then some excitement from the box office. And before you know it, we could be looking at 61, 62.
Yeah. I mean, yeah, man, it's so interesting because it's one of those things where I could see a scenario where, like I said, the holidays is kind of quiet and people don't really do much. Big money isn't moving it. But on the other side, if we see a technical bounce or a technical breakout, and then someone's sleeping at the wheel and not really paying attention, well, that's also a potential recipe for something else crazy happening. If they're like, hey, I'm heading out Friday, going on vacation, and they're not paying attention to what's going on, I could just see, like, I think both are realistic, and that's one of those things with the market is, like, sometimes you just have to sit back and see what it gives you. You can't force it. I mean, forcing a trade is, like, one of the best ways to lose money. So as much as we don't want to believe it, it's just, like, patience truly is a virtue in this situation.
Absolutely, man. I agree 100%. You know, and patience is something that I'm like a huge stickler for. I kind of talked about it a little bit in the beginning of the live stream too. Just, you know, patience and discipline, and you know, just being a sniper. You know, and not being a machine gunner. And I was a machine gunner early in my career, but being a sniper is, you know, just wait for your opportunity. Don't be the trader that's running out on the battlefield, firing their weapon at every single thing they see moving. Be the sniper that sits back on the hilltop in the grass and waits for the perfect shot where you have the highest probability of success. And that is what being a consistently profitable trader is all about.
I 100% agree with that. In terms of like a very, very specific trade, if we're looking through that sniper mentality, so right now, like I have a core position, and I was actually thinking one of the best opportunities to actually add to it is on that exact breakout. Like, would you agree with that? Because like if I'm sitting, waiting, like I'm not trying to hop into like exactly more shares right at open, and definitely not options, because I just don't want to get beat up by theta if we're not moving much.
Yep.
But if I see that bounce off the bottom wedge or a breakout, especially on the breakout, that might lead to another spike in volume and potentially even more volatility. So I feel like in this scenario, especially if you're listening, you're like, hey, I've heard of AMC, but like I'm a little hesitant to hop in. To me, those are two awesome scenarios. A reversion play off the bottom of the wedge that you drew earlier, or waiting for like a close or even that official breakout of the top of the wedge and just seeing if it rips, and then risking potentially like the bottom of the wedge from whenever that happened in like early June or something like that.
Yeah, so I actually those are, so you basically just identified like the best two buying zones that you have on AMC. And I'll just talk a little bit actually, just because this is something that I go through with people, with the difference between like a conservative trading style and an aggressive trading style. Conservative style traders, and this has nothing to do with position size. You can have a $500 account be aggressive, and you can have $1 million account be conservative. It has everything to do with where you are entering trades. Conservative style traders typically tend to buy pullbacks into support levels, and aggressive traders tend to buy breakouts through resistance levels. So you have different scenarios here. And for all of those people that are talking about, hey, should I buy AMC now? Okay. Now, when you're talking about Matt and I, we've been in AMC now for a while, but people that are now, and to answer your question, Matt, yes, if we get that breakout through those 60s, I am definitely adding AMC. Okay, I will definitely be adding AMC if we break through that level. But for everyone that's on this live stream that is maybe that is not in AMC, that's wondering, how can I get in AMC? How do I know when to get in? Let me go over with you 2 actual points. And it's personal preference. If you want to be conservative or if you want to be aggressive. Okay, and that conservative entry point, which Matt was just talking about, would be down there on the bottom end of the channel, which is kind of right where we're currently sitting, right? We're sitting right down at the bottom end of this channel. We're also sitting at the bottom end of that pennant pattern. Okay, so a conservative entry would be down here at the bottom end of this range by the support level. The aggressive entry would be if you wait for a break out of it, and then a break out of this level. Now that would be an aggressive entry. So you could either be conservative and have an entry down there in the low to mid 50s, or you can be aggressive and wait for the resistance to break. And then you would also want to look for an increase in volume to confirm the breakout. Okay, you always want to see an increase in volume, everybody. When you get a breakout through a key technical level, which those mid 60s is a very key technical level on AMC, you always want increasing volume to confirm that breakout. So if you get that, that's a buy signal. So there's a couple different ways you can play this. You can either be a conservative entry and just get in there and then hold that position. You can be an aggressive entry, wait for the breakout and hold that position, or you can tier your way in. You can buy a piece of your position down here, and if and when you break over that level, you can add to that position, get up to full size. That's what I plan on doing. I plan on adding to my position on a break through 64, 65. And then I would be in a max size position, and I would look for the move to new highs. So, I plan on adding on a break through that level, but anyone that's on this live that is not in AMC and is trying to figure out how or how they should go about doing it, those are some ideas or some buying zones, in my opinion, that look pretty appealing based on the chart that I'm seeing.
I like that. I mean, I just want to reiterate that the importance of tiering. I've always been for me, it's been described as pyramiding in and out. And it's one of those things that when you're newer, especially if you're battling PDT, you don't like to do multiple buys and multiple sells. But that will help you out so much with your trading. You do not want to be in the game of trying to bottom tick and top tick. It's so nice to get a portion out here, a portion in there. And with it, yeah, it might mess with your PDT, but you'll have such better trades that you'll quickly get over PDT. So it's one of those things that it might not be the most fun at the start because you're like, oh, hang on, I don't have a trade. I don't want to make it now. I'll wait till the next day. But in the long run, I love tiering in, tiering out. I think that's one of the best things. When I really got comfortable with that. And that's not even necessarily AMC or GME specific. It's just good trading methodology. But I guess with that, unless you have anything more to say about AMC, I would love to kind of get your thoughts of just the market at large right now, because I know we were talking about that a little bit, and I think some interesting things are happening. For those of you who don't know, the overall market, the S&P 500, hit a brand new all-time high, most likely on the back of a bipartisan $1 trillion infrastructure deal that kind of looks like it's going to get approved this past week. That was the hot topic. But blows my mind that the stock market is trucking higher on that announcement when the Fed was basically you know what, we think might be raising interest rates to battle this inflation thing that they keep saying it's transitory. But I'm well, I don't know. I don't know what you're on, but this seems insane to me. Just the money supply is through the roof. But I wanted some commentary because there's so many things that are blowing my mind right now. Market all-time high, major indices, all of them, the NASDAQ, the Dow, S&P 500, oil running like a madman. Once it hit 30, 35, it has not stopped. We're already up at 74, 75. So, I guess we could talk about that, but I think that's going to be really good for EV plays just in general, Tesla, NIO, Workhorse, blah, 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 as more of the longer term. But what I don't get, gold is settling super high as well. And then we're seeing bonds come down. And I get the bonds coming down could be one of two things. It could be money leaving bonds, going into equities because it's a better return if you're going to get low, crappy interest. But on the other side, is it dropping because people are front running the fact that they could be raising bonds? Like, we can't have all of these things. Like, some of them are contradictory to each other. And my mind is blown at which way is going to actually like give way first. Because like, you can't have all of this movement in unison. It makes no sense to me.
Yeah, man. It's funny that you just brought those points up, because I had a conversation last week with a bunch of my members in chat about how there's such a disconnect with the way that certain areas of the market are moving, like you said, with bonds, with equities, and then with gold, and when you're talking about inflation, and it's like so many different, and now you even factor in crypto into that as well, because crypto has kind of been seen as kind of an inflationary hedge as well, but they've got their own weakness on the back of all the China restrictions, which has really, really hurt crypto over the last couple of weeks. But I think, and I'm going to give you guys kind of my 2-year outlook for the markets going forward, because this is what I truly believe is going to happen. And this is how I am planning and adjusting myself. I have not sold a single thing in my long-term portfolio for the last 10 years. I've only added over the last, never sold a single share in my long-term portfolio. That's going to change within the next probably 2 years, maybe sooner, because what I think is going to happen is once COVID is completely behind everyone, not just in the United States, but on a global scale, once it's no longer a topic of discussion, I think you are going to get a euphoric melt up in the markets, where people are going to be so excited about the economic recovery that they're going to kind of forget about the Fed. And I think the market's going to have a melt up, kind of similar to like the move that we saw prior to COVID. I didn't understand the move to all-time highs prior to COVID. And I'll actually just, let me just go back and kind of, let me actually go back to this right here. So when this was going on, okay, this entire move to all-time highs back in January and February of 2020, China was dealing with COVID. China was actually shutting down parts of the country, shutting down parts of their economy, but our markets were still going to all-time highs. That made no sense to me at the time, but we still had this little float up higher. I think you're going to get similar action to that, okay, in the very near future. I think I think we're going to get a melt up to like 440, 450 on the SPY, and then the Fed is going to step in and then have to raise interest rates, and that's when the music stops. And that's why I think you have, a sizable correction in the markets. You're looking at anywhere from a 20 to 35% pullback in the markets. And the depth of that pullback, I think, is going to be based on the reason the Fed is raising rates, because the reason they're raising rates is going to dictate the speed in which they raise. Now, if they raise rates because we are back to full employment and inflation is in fact transitory, they will raise rates much more slowly.
Yeah.
Okay, you're going to go from 0 to a half a point, and then from a half to 1, then from 1 to 1.5. You're not going to get these massive jumps, because they'll just slow roll out kind of they're going to call it like stepping off, and they're going to stepping off with all of their easing, and they're going to start to raise rates. The markets will be able to digest and handle that better. We're still going to go down. Okay, I think we're still go down once we raise rates, but it won't be as severe. If they raise rates because they're wrong about inflation, and the reason they're raising rates is not because we're at full employment, but because inflation is just running out of control, that's a different story. Now they're going to have to raise rates much more aggressively to try to get ahead of inflation, to stop inflation. Okay, so you're going to get higher jumps in interest rates. The markets are not going to be able to digest that. So that's when I think you get the much deeper pullback. But I have not sold anything yet, because the markets have just proven to us that even though they know that time is coming, we're still not worried about it. The market is taking we'll deal with it when we get there. We'll cross that bridge when we get there. That everybody knows we're raising rates within the next. If you ask anybody on the planet, by 2025, are we going to have higher interest rates? Oh my God, absolutely. What about by 2024? Yes. Oh my God, absolutely. Mm-hmm. So everybody knows that, but the market's still going to all-time highs. And that's why I think everyone is going to try to stay on the long side of this trade as long as they possibly can until the music stops. And then it's going to be a rush for the take profits. And that's why, like, once we start to get to the back end of this year, I'm actually going to start peeling off pieces of my long-term portfolio, specifically in like my high growth tech names. And then I'll be, raise a bunch of cash. I'll probably sell maybe 50% of my portfolio. And then I'll use that cash to, when the markets do give me that pullback, then I go back in with that cash and I start to accumulate all the same stocks. I just think I'm going to get them 30% cheaper.
Yeah, no, I agree with that. If you could zoom in on this daily chart really quick.
Sure.
So I just wanted to illustrate one point. So between Friday and Monday, there's we kind of had that V formation. So actually, when I saw it starting moving up, just for those of you who don't know, there is a statistical edge to gap fills. So when I saw that gap on the SPY, I actually picked up some calls and I was simply playing for that gap on the July monthlies. But it just kept running and running, and it blew my mind away because it actually even exceeded this wedge structure that it broke out above it in a very unique manner. I was like, what? So it's one of those things that I like looking at that gap, and for me it was going to be a quick play, maybe a 2-day, a very short swing play. But the momentum continued and continued. And so I just wanted to bring that out there for people who want to learn a little bit more about gap plays. It's one of those things that there just is some sort of mathematical edge to gaps being filled eventually. It's not in any way guaranteed the next day or the next week, but eventually. But I also want to, I saw some comments about the Delta variant going on. I'm not calling for doomsday. I have no idea what's going on with the Delta variant, but a learning lesson I took from U.S. politics in 2021 is pay attention to what elected officials are doing. That was the one thing that I wish I saw in February. I wish I put a little bit more weight on it. But if you're seeing government officials load up on a position or get out of a huge position, it might tell you something a little bit you need to know. That was the big lesson that I paid. I don't know. I wish I was a little bit more on it in making that trade in February, because what I'm referring to is the fact that a lot of government elected officials, they pulled the ripcord. They got out. They didn't necessarily bet against it, but they're like, you know what? I want to be out of the market. And then you know what they did in March? They bought right back in. And It is legal. I know, well, that sounds messed up. Yeah, it sounds messed up based on current law. That's actually a legal practice. So me moving forward, I don't know what's going on with the Delta variant, but I know I'm going to be paying attention to government elected official positions and see what they're doing with their overall stocks.
Yeah, I'm also, and really good point about paying attention to kind of some of the portfolio moves on the elected officials. That was, that there were warning signs there, and a lot of people missed it. So really good point. And I'm not worried about the Delta variant either. So far, they say that, the vaccine is effective against it. And I just can't see, honestly, I can't see any scenario outside of a zombie apocalypse that we shut down the country again. I just don't. I don't think that, I think you would have such an uproar nationwide, every major city. I don't think this country or this world can go through that again. I can't imagine that we're gonna, you know what, guys, we're gonna complete lockdown. We're going on a 30-day lockdown. We got to get ahead of this. Yeah, we've been there before. We've heard that storyline, and I just don't think, I just can't see it happening. I'm not gonna try to position or trade for that scenario because I just can't see it panning out. And I don't know. We don't have the capabilities to stimulate the economy again the same way that we did. We can't just throw another $9 trillion into the economy. It's just not going to happen, and I don't see it. I really just don't see it.
Yeah, I mean, we're worried about inflation now. Imagine what it would get to if we had round two. It would just be an ungodly number.
Yeah, get ready for $20 gallon of milk.
Yeah, it could. But like it, I mean, I've been tracking it, reading it, and more so like, I mean, obviously it's just good to know. But in terms of trading, and right now, like I agree with you. Like it right now, things are trending up. The trend is your friend. There's no reason to call for doomsday when you're making money just riding it. Like right now, the trend following over the past couple of years, it's been such easy money. Like you just ride the trend higher and higher. I just wanted to share that bit that like it was something that like I guess as a trader, you're gonna have these aha moments of realizing, okay, like with elections, this happens, blah blah blah. There's like little things you pick up, and that was one thing that like I just like wish I knew, and now I'm like, okay, I'll play a little bit. And just so you know, I saw some people asking, they are reported, like you could see it. Just give it a quick Google search, and you, like it's not like their positions are hidden; they have to like publicly disclose it.
Yeah.
So moving forward, like on the off chance, it's worth once in a while to give it like a weekly, a monthly Google search of what they're doing.
It's a good point. And especially like where, the sectors in which they are active is really key too, especially knowing it's so shady. I can't believe that this is even, it's like, I can't even believe it. It's like you have the anchors on CNBC aren't allowed to own stocks, but our government officials can. The people that make the laws and dictate where money is spent. But if you see big activity in certain sectors where maybe there's certain talks going on with different bills and different legislation and like the stimulus package. I'm not the stimulus package. I'm sorry, the infrastructure bill, like just something like that. If that's in the headlines and you see major moves prior to that, that could be a little bit of an indication, a little bit of a hunch that you people should be paying attention to. Just to circle back to Matt, like when you were talking about the call options on the gap, I am actually shocked that we extended to all-time highs on Friday.
Oh,
I was shocked. I thought for sure we were going to double top up there around 425, 426, and just take a breather. Like I really thought the markets were going to just hang out right there. I thought we were going to get a couple of days, like some real low volatility days, real small candles, like 2-point ranges on the whole day, go back to, 420, 424, 420, 423, 22, 25. And I thought we were going to sit there for maybe a week before making a shot to all-time highs. So I was actually really surprised that we had so much power, because you're right, this was such a powerful move to swallow up that gap down, that I didn't think we were going to have enough juice to go right through the all-time high. I thought we were going to have to take a breather right here. So yeah. I was actually shocked.
Yeah, I definitely agree with you. Like, I mean, for me, I was like, okay, I could see the gap fill play, but I thought the infrastructure plan would have like a bigger impact on companies such as Caterpillar and like related within that industry, because it's just they're redoing infrastructure. That makes sense. I didn't think that would bring the entire stock market to a new all-time high. Like, because right there, that news outweighed just the Fed saying, yeah, no, there's worse inflation than we thought. Like it, and that's it. Like sometimes the stock market, like it does crazy things like that. They're like, oh, okay, I guess like they thought it was more important than we did, and like you just recognize it and you move on.
Yeah. That's why I feel so to the point with the overall markets that it's not time for me to sell my long term yet, because I do think that we're going, like the market just proved it to me. You had that big sell off when you had the Fed meeting and you had the St. Louis Fed Bullard make the comments that he did, which is really what gave us that 10-point drop. This 10-point drop was Fed related, it was inflation related, and it was fear of higher interest rates sooner than people expected. And that was the reason why we dropped. The fact that we were able to swallow that up so aggressively, it just tells me the markets is just going to stay behind this liquidity rally, which is what this is. The Fed's not stopping their tapering, okay, at least for the next couple months. Even once they announce they're going to taper, that they're going to announce it ahead of time, so that they'll give a taper schedule when they actually do. So you still have a couple months of the Fed spending $120 billion a month buying assets, So I think that we're still going to go higher. I do think that pullback comes, but a 30% pullback from 425 is a hell of a lot different than a 30% pullback from 445 or 450.
Yeah,
and I do think the markets continue to go higher this year, and I think you could be looking at a 435, 440 sooner than we think. So
I think it comes
I still do remain bullish.
I think it comes at a super interesting time as well. Like back in my algorithmic trading day on the futures market, the end of June to the end of July is notoriously very bullish. And then August is a bit flat, September is weird, but then you hit October all the way to December, and that's strong once again. So the time that we're hitting a new high now with the infrastructure deal going through and the seasonality being bullish literally for the remainder of July, I don't know. I could it blows my mind that I'm saying it, but I could very much see a reality when the stock market, it just keeps riding this higher and higher. And I'm not calling for a huge spikes each day, but a slow, like you were referring to, a melt up, just higher and higher for a good month. I think that's very much in the cards.
Yep, exactly. Where it's not like this huge rally. It's just oh, we're up another 0.5% today. New all-time high. Oh, we're up 0.25%, new all-time high. Because you're going to get this time period where it's you're going to have for 2 weeks straight, it's going to feel like almost every day we make a new all-time high. And I think that's that little drift higher that's where I think we can be. So cool, man. Dude, I got to tell you, Matt, another awesome discussion, bro.
I appreciate it. Well, I'm sure there's a lot of people who were able to learn just more of those technicals and confirming some of my own thoughts on AMC. So to the apes out there, I hope this was helpful. And to everyone else, just not only AMC, but the market, just some of the things. But I appreciate the discussion as always.
Yeah, man, for sure. And it was fun. It was fun actually talking overall markets with you instead of only AMC. I feel like all of our discussions have been AMC, so it was fun. It was fun to kind of talk broader markets too for a little bit, man. I appreciate you taking the time on a Sunday to come on and join myself and the rest of the TTG crew and share your insight on what you see going on. And as always, bro, was a fun conversation. We'll do it again real soon.
I appreciate that so much, and to everyone out there, best of luck in the markets. We'll catch you soon.
Thanks a lot, bro. Take it easy, man.
Bye.
All right, folks. Man, another awesome stream. Another really, really awesome stream. A lot of information in there that Matt and I were just going over, AMC and the overall markets, a lot for you guys. I told you, we had a lot to unpack here today on the stream. So I really hope a lot of this was helpful. I hope you guys really learned something from this. But I see that there's a lot of people that have been asking in the comments about a membership to True Trading Group. I will get into that later, but I want to keep going with the education and the substance of the live stream right now. So those of you that are asking about it, I'll get into that in a little bit later, but I want to keep going with the education here on the stream because there's a very important lesson I want to go over because there's a lot of people here that are new, and I want to talk to you about real quick one of the biggest mistakes that I see beginner traders make, okay? This is, again, hear me out. And if you are a beginner trader, I suggest you get out a pen and paper. I'm going to talk to you. I don't need a chart. I'm going to give you guys a lesson right now that's going to completely change your trading forever. Okay, this one lesson is literally going to improve your chances of becoming consistent. So pay very close attention if you guys are new. I know there's a lot of people that are new on here because I just can see the comments. Okay, I can see the people that are commenting. I can see the questions that people are asking. So one of the biggest mistakes that I see beginner traders make is they do not understand the correct way to manage their risk via position size. The biggest mistake that I see traders make over and over and over again, and I'm talking probably 95% of beginner traders make this mistake, on every single trade they make, they put the same amount of money into the trade. So let's say someone's like, hey, I'm buying XYZ. I'm going to put $5,000 into XYZ. And then they're going to go, they're going to be like, whoa, I'm going to go buy ABCD. I'm going to put $5,000 into ABCD. Oh, I'm going to look at MNOP. I'm going to go put, $5,000 into MNOP. That's wrong. That is incorrect. And then what do they do for their stop loss? They go, I'm going to put $5,000 into this trade. I'm going to set my stop loss at 5%. Wrong. Incorrect. Listen to me very carefully. The correct way to do this, your position size should vary on every single trade you make. What should stay constant is the dollar amount you are risking on the trade. Okay, let me clarify. You have to figure out what is the dollar amount that you are comfortable risking per trade. Meaning, if you are wrong on a trade and you get stopped out, you sell it for a loss, how much are you okay losing? What is that number? Now that number, you have to figure that out. I can't tell you that number, okay? My number and your number are gonna be totally different. So now, is it $100? Is it 200, 500, 1,000, 5,000? What's that number for you? Once you figure that number out, you need to position size yourself on every trade so that if you are wrong and you get stopped out, that's the dollar amount that you lose. You don't just randomly select a percentage for your stop loss. This is incorrect. I know a lot of people talk about, oh, you don't want to risk more than like 4 or 5%. Why? What is 4 or 5%? That doesn't make any sense whatsoever. Your stop loss on a trade needs to be where it belongs based on the chart pattern, okay? So if you're looking at a chart pattern, you're saying, hey, I want to be long this stock, there's going to be a level that if this level breaks, then the setup that you see is no more. That setup doesn't exist anymore. Therefore, you don't have any business being in that trade. Your stop loss needs to be just beneath that level. So if the level's broken, you get stopped out, you exit the trade. Now, it doesn't matter. That level could be 1% away, it could be 2% away, it could be 5%, it could be 7% away. You need to adjust your position size so that if you do get stopped out, that's how much money you're going to lose. So many people do this wrong. If you're someone that very oftentimes gets stopped out and then the stock goes higher without them, if that happens to you often, you probably are doing this wrong. Your stop losses are probably in the wrong place because you might be buying a stock and setting your stop loss at 4%. Well, a 4% stop loss may still be above, okay, that level. Say if you buy a stock here and here's your support level. When you buy a stock here and you set your stop loss at 4% might be here. Well, the stock's going to come down, stop you out. It's going to test support, hold support, and then it's going to go higher. That's why you can't set your stop losses that way. Your stop loss needs to be set based on the chart, not based on some arbitrary percentage that you heard somebody on YouTube say, oh, you want to risk around 5%. 5% is relative. If you risk 5% on a small cap biotech that just came out with FDA approval, that just went from $3 to $15. 5% on a stock like that is nothing. Nothing. But 5% on Apple is huge. Huge. I can get into 3 completely different position sizes and still risk the same amount of money. I can get into, let's say, a really high volatile, couple day expiration SPY option trade. And where if I get stopped out, I'm actually probably going to lose 50% because that's how volatile that option will be. And if I want to risk $5,000 per trade, if I put $10,000 into that trade, I'll lose $5,000 if I get stopped out. So that's a $10,000 position size, risking 5 grand. Then I might buy a small cap, maybe a $5 small cap that has news or whatever. And if I'm buying it at 5, maybe my stop loss is 450. Well, if that's the case, I'm going to buy 10,000 shares at 5. My stop loss would be 450. That's a $50,000 position size. So that's a $50,000 position size, but 10% risk. That's a $5,000 loss. The SPY trade was $10,000 position size, 50% risk, a $5,000 loss. Then I might buy something like Tesla. Let's say Tesla's at $500. It's not. I know it's not. It's at $700, whatever. But let's say Tesla's at $500. I can't think of a $500 stock off the top of my head. So let's say Tesla's at $500. I might say, well, my stop loss is at $495. Now, if I buy Tesla at 500 and my stop loss is 490, or I buy any stock at 500, my stop loss is 495. In order for me to risk $5,000, I need to buy 1,000 shares, right? 1,000 shares at 500 stopped out at 495. That's a $5,000 loss, but that's a $500,000 position size with 1% risk to my stop loss. You see what I mean by that? The percentage is relative. So I just gave you 3 examples. $10,000 position size, 50% risk, $5,000 loss. $50,000 position size, 10% risk, $5,000 loss. $500,000 position size, 1% risk, $5,000 loss. That's the correct way to manage risk and the correct way to set position size and stop losses when you are trading. So many people do this wrong. So many people say, oh, I just put 2,500 into every single stock. That's not that's incorrect way to do it, because if you put 2,500 into every single one of these trades, if you put 2,500 into all 3 of the trades that I just gave you as an example, you're going to lose a completely different amount of money on every single one of those trades. You're going to lose $1,250 on the 50% risk trade, and you're going to lose $25 on the 1% risk trade. You're never going to be consistent that way. You need to size up when you're risking less, and you need to size down when you're risking more as far as distance to your stop loss. So the way that you guys want to calculate what that position size actually looks like is you're going to want to say to yourself, okay, what's my number? If my number is, you say your number is $500. If your number is $500, then what you're going to do in order to figure out what your position size needs to be in order for you to risk $500 is you're going to say, if I buy the stock here, where's my stop loss? You're going to answer that question by looking at the chart. You say, okay, I buy the stock here, my stop loss is here. That distance, so let's say you buy a stock at 500, you buy a stock at $5 and your stop loss is 450. That is 50 cents distance from your entry to your stop loss, right? 5 to 450, 50 cents, that's the distance. So you're going to take your $500 that you're willing to lose, you're going to divide that by 50 cents. That will tell you how many shares you need to buy in order for you to risk $500. Then let's say you buy another stock at $10 and your stop loss is $9.70. That's 30 cents, right? So you're going to do 500 divided by 30 cents. That's how many shares you have to buy. And so on and so on. That's the correct way for you to adjust position size and manage risk. So now this way, whenever you make a losing trade, you will lose the dollar amount that you are comfortable losing. Where traders go wrong is that they just buy the same amount of position size, even though all these different trades have completely different risk and completely different volatility. And one trade, they lose a little bit, but another trade, they get crushed. And they're like, oh my God, I just got killed. Oh my God, I just got killed. That should never happen to you. If you ever say this to yourself, oh my God, I just got killed. If you ever say that to yourself, that means you made a mistake. That means one of 2 things happened. You either didn't stick to your stop loss and you said you were going to sell it and never did. You just held it and the stock kept going down. Or you had too much position size. If you say to yourself, I'm going to buy the stock at 20 and I'm going to stop out at 1850. And if you actually get stopped out at 1850, you should be like, oh, okay, on to my next trade. You should not be like, oh my God, I just got killed. Why? Why did you just get killed? That means you had too much position size. So when people say to me, hey, Mike, What's your average position size? I automatically know you do this wrong because I don't have an average position size. What's my average position size? I don't know. I might trade an option and put 10 grand into it. I might trade Tesla and put 500 grand into it. What's my average position size? I have no idea because my position size is different on every single trade that I make. But what stays the same and what stays consistent and constant is the dollar amount I'm going to lose if I am wrong. This is one of the biggest mistakes that I see beginner traders make. And as soon as you start changing this aspect in your trading, watch how much of a better handle you have on your risk management, and watch how much more better you can control your downside on trades that you lose money on. Okay? One of the most important lessons that I can give any beginner trader that is first starting out, this is something, I'm a huge stickler on risk management. This is something I talk to all my members about every single day. I have lessons and courses on this stuff, and I think that this is a lesson that can help a lot of new people that are on the live. And I know there's a lot of you because I can tell by some of the questions that you guys were asking. So I hope this was helpful. I hope that's a lesson that you all wrote down. I told you to get a pen and paper, take some notes. We went over some lessons there. We went over the SPY, we went over AMC, went over a lot of stuff here tonight. So I hope you guys were paying attention. I hope you guys got some value out of this. Okay. What I would like to do now, okay, I would like to see how many people that are on the live stream right now are not members of True Trading Group. If you are not a member of True Trading Group, I want you to type the letters TTG in chat right now. All right, we got Justin Yemek, we got Father Guido, we got Desert Babe, Tim Plummer, Bang Tango, Vi Watch, Andre V, Michael Hasten, Drit Z, Sylvie Bonholm, Ferdinand, Jason Leddit, For Crying Out Loud 2.0, Shazvat Rathod, Sam E, Kelly Ramsey, Ricardo Montalvin, Feeling Shifty, Go For It, Neil Go, Holding For You, Mac and Bees, Taylor Jones, 1 Minute Creatives, Will Price, Robert Query, S. Tala, Captain E.T., Jim Cordova, Freedom Joe, RB Thomas, Sahid, Richard Britton, The Other Donald, Rylan Hayes, Is This My Alias, The Agent, Cano Pokes, Maximin Renee, Gavin Jeter, Moro Rodriguez. What's up, guys? I love it. Beautiful. There's a lot of not a lot of non-members in here. I love it. For all of you that just typed TTG in chat, please understand something very, very specific about myself and the rest of TTG is that I will always talk honestly with you about things here. I don't sugarcoat anything. I don't blow smoke up your ass. I tell it how it is, like it or not. All right. And like it or not, trading is not a get-rich-quick scheme. You have to be willing to put in some time, energy, and effort to actually learn this skill. You are learning a skill, just like any other skill in the world. It's going to take you time to excel at it, right? If you've never done something before and you've never been taught how to do something, you're not going to be very successful at it if you don't get an education, you don't get a training. It's like when you start a new job, do they just throw you into the lion's den or do you go through a training? There's a reason for that. Okay. If you guys want to be successful at trading, you got to be willing to put in some time, energy, and effort. All right. So for those that were asking, a membership to True Trading Group, guys, it's normally $2,212 for the year, but from now until midnight tonight, you can actually save 41% and pay only $1,290. Okay, that's just over $100 a month. And the next 30 people that sign up with coupon code TTG121 will also be getting a free Android tablet. We also do cover the shipping costs for you, and we do ship globally. We have a total of 30 brand new Android tablets. These things sell out fast, guys. Honestly, they probably won't be around until midnight tonight. So the next 30 people to use TTG121 coupon code will get a 41% discount and will get a brand new Android tablet. All right, they're first come, first serve. There are no upsells in True Trading Group. There's no add-ons. Okay, you pay one price and you get access to every single thing that we have for the entire year. Folks, whether markets are up, down, left, right, center, sideways, we're becoming better traders and we're making money in True Trading Group. And if you guys don't believe me, watch this. If you are a member of True Trading Group, so I already asked if you're not a member. Now, if you are a member, If you are making money and you're becoming a better trader because of True Trading Group, I want you to sound off in chat right now. Sound off in chat right now. If you're a member, you're making money and becoming a better trader. Now, everyone that typed the letters TTG, I want you to pay very close attention to this side of the screen. I want you to pay very close attention to these are my TTG members. They're going to be commenting here, telling you how they are doing since joining the TTG family. So go ahead, guys, sound off, comment in chat there right now. Now listen, it's very important. I mentioned this earlier in the live stream, but it's very important that I'm very clear and honest with you guys about something. Although 80% of my members are doing well, meaning they're making money and they're becoming better traders, there's still 20% of our members that are struggling. And I talked about this earlier, but in TTG, we leave no trader behind. That's why we hold those red to green monthly workshops. These are those live events where struggling members, they submit questions and lessons that they need help with. And then me and some of my other moderators, we cover these lessons in a live chat session. We record the whole thing, and then we load it up into the video library for people to go back and watch at a later date. I know it's not possible to have a 100% success rate with my members. I know that's not possible, but that doesn't mean we can't try for it. And that's why we leave no trader behind in TTG. Guys, True Trading Group is a business, okay? It's a hell of a business. I told you, I'm honest about everything I talk to you about. It's a business, but it's only as good of a business as our members are actually doing. You know, we must get up. We've got to get up every single day and earn the trust and support of our members. And that means long after they've paid for their yearly membership all-inclusive fee. You know, we don't take lightly the responsibility, the trust that we are given. And that's why we work hard every day to continue to earn that trust and earn that support. You know, these are people's lives we're talking about. You know, I know that I would not be where I am today if I did not have the mentorship, the education, the experience that I had when I was working at the fund in New York. I know that. I'm humble enough to say that I didn't figure this stuff out on my own. I was taught. I had mentors. I had people that I can go to, that I can ask questions. And if I didn't have this skill, my life would have not gone down the path that it has gone down here today. I know that. And that's why I know the power of actually helping someone become a consistently profitable trader, what that can do for them and for their families. I don't take that lightly. These are people's lives that we're talking about, folks. Now listen, if you typed TTG in chat before, understand one thing. No one is going to do the work that's needed for you to reach your goals. You have to be willing to do it. It starts with getting the right education, having access to the right tools, and being part of the right community that's going to help you to learn, trade, and profit. And that is what True Trading Group is all about. My team and I spend about 12 to 15 hours a day on our members, on our platform, continuously improving and adding value to the system for them. Okay, I told you that 1 year membership is normally $2,212, but from now until midnight Pacific, you can save 41%. It brings the price all the way down to just $12.90. That's it for the whole year. You never pay another dollar again, and you get a free Android tablet for the next. Ooh, Michael, welcome to the TGD family. Everyone give a big warm welcome to Michael. So now there's 29 tablets left. We had 30. So the next 29 people to use coupon code TTG121. We'll get a 41% discount, and we'll get a free Android tablet. We also do cover the shipping. Okay. Now, I told you, think of us as the Netflix of trading communities, because True Trading Group, you're not just signing up and paying for trade alerts. Okay. You're not just paying $12.90 to get my trades. Okay. First and foremost, True Trading Group is not just me. There's 8 other moderators that are calling out trades, that are answering questions, sharing their screen, identifying opportunities, talking on the microphone, that all implement their own trading style and strategy. A lot of variety in True Trading Group. Day trading, swing trading, long-term investing, options, crypto, you name it, we've got it in TTG. So there's something for everybody, regardless of your trading style, if you're trading small caps, mid caps, large caps. We have different traders, different moderators that trade all different things in all different styles. Very important you have that diversity to understand that there's so many different styles of trading that one person's style might not work for you. And that's why we have so many different moderators that have different styles, so you can get a feel for what moderator you kind of feel with the most. Okay, and if you guys think that you can't do this because you work a full-time job, you are dead wrong. Okay, you're dead wrong. I saw somebody was asking like, oh, well, you know, I work, 10, 12-hour days. It's something I can still do. Guys, listen very carefully. Anyone that is wondering, oh man, I work a full-time job, I don't know if I can do this. This is for you, so please pay attention. If you are a member of True Trading Group and you are making money while working a full-time job, I want you to sound off right now and type the letter I in chat right now. Type the letter I in chat right now if you are making money with True Training Group while working a full-time job. Anyone that is not a member, and if you're concerned that you work a full-time job, that you're not going to be able to benefit from something like this, I just want you to look right here. Just look right here. Don't even listen to me. Just look right here. Okay? All of these letter I's are TTG members that work full-time jobs. The majority of our members do work full-time jobs. Okay? The majority of them work full-time jobs. That's not something that can hold you back. That's where the different trading styles really come into play. That's where maybe swing trading is a trading style that you're going to be focusing on. We also have a mobile app, okay, that's downloadable on iPhone and Android that can allow you to stay connected to our chat room even if you're not in front of your computer. You'll also get real-time push notifications whenever a moderator enters or exits a trade. That's how all of our members that have full-time jobs, that's how they're able to benefit from the TTG platform. Okay. Another very common misconception is that people think that, not only if I work a full-time job, I can't do this, but another common misconception is that I need tens of thousands of dollars in order to make money trading. That's also a very common misconception. Watch this. If you are a member of True Training Group and you started with less than $1,000 in your account, sound off in chat right now. Tell me what you started with. Tell me where you're at now. Okay, if you started with less than $1,000 in your account, tell me, sound off in chat what you started with, and let me know where you're at now. Anyone that feels like, oh man, I've only got a couple $100, I can't do this, pay attention. All right, JG started with 500. David Sanchez started with 1,600. He's now at 2,900. Matt started with 500. Tanya started with 250. Karen Hurst started with $300. She has built it up to 16,000. John Parker started with 500. You've got Binta 500. Kyle Edwards started with 500. He's up to 1,780. Jim Dandy started with 500. He's up to 1,300. Binta Diop started with 500. They're now at 18K. LJ Green started with 500. DD Jack started with 600. Couldn't Let Jay Marston Die started with $250. They're now at 3,800. JG started with 500. They're now at 5,000. Walter Thomas started with 500, is up over $25,000 in realized gains since last August. Thanks to the TTG fam. Walter, phenomenal job, brother. Keep it up. Wizard started with less than $5 and in 2 months is out of PDT, almost out of PDT rule. That's amazing. I don't know if that's a typo. Maybe you meant to say 500. I'm not sure, but it's almost out of PDT rule. Diane Fig, this is actually, I know Diane big time. Diane, I love you. Started with $100 and is now up to $5,000. Charles Lane started with 500, is now up to 4,400. November Ball, 900, is now up to 12,000. Alan Albury, 300, now up to 3,800. Guys, you see what I'm saying? Okay. Oh, 5,000. There it is. I knew that. Wizard, I knew that. He said, I started with 5,000. I'm now almost out of PDT, which is 25,000. When you said $5, I was like, maybe that has to be a typo. So cool. Yeah, that's what I thought. All right. So you guys get it. All right. You guys get it. Okay. That's why I said I want you to pay attention to some of the comments that were coming through in chat right here. These are my TTG fam guys. They're telling you, look, it doesn't matter if you work a full-time job. It doesn't matter if you only got $100 to start with. You can do it. There's no difference between them and you. All these members that you see commenting right now, they found True Training Group the same way you did. That is a live stream on YouTube or Facebook or whatever media channel you're on right now. If they can do it, so can you. And they explain to you guys what you're actually getting because TTG is an entire platform, okay? When you join TTG, you're getting access to the top premium trading tools and products because we bundle them together as part of your membership, okay? Included with your membership at no additional cost. Everything I'm telling you is included. You pay one price, $12.90. That's it for the whole year. You don't pay another dollar. Jason, welcome to TTG family, folks. We got 28 of those tablets left. Okay, 28 Android tablets left. Jason, welcome to the TTG family. All right, So guys, listen, you're going to get included with your membership Benzinga Pro's real-time newsfeed. This is a game changer for active traders. Okay, this is a live breaking to the second news alert service right inside of our chat room. In this environment, guys, the trader that gets the news first wins. Okay, I can't tell you how much money we've saved and made because of this newsfeed. I can't even begin to tell you. Okay, and it's free with your membership. You're also going to be getting Quote Streams real-time level 1 and full book level 2. That gives you all market maker depth on the level 2 from Quote Stream. There you have it. Okay, you also have real-time options data there as well. Okay, that also comes with a simulator. This simulator, guys, is from a company called ETNA. And a lot of brokerage firms use this simulator to train their new hires when they hire new people to work at the firms. This allows you to trade stocks and options with fake money while you practice implementing what you've learned in the courses. All of this is free. You don't pay $1 extra for any of this. This is included with your membership. Then you also get access to a Trade Ideas scanner. Our Trade Ideas scanner shows you stocks that are making new highs, stocks that have unusual volume. It's broken down in small caps, mid caps, and large caps. It tells you what are the best stocks for you to trade during the day. You also get access to TradingView's Pro charting software, which is one of the most commonly used charting softwares by active traders today. Okay, all this is free, no additional cost. You're getting at least a minimum 10 easy to follow, actionable real-time alerts per week from a community of traders currently sporting about an 83% win rate. And we are fully transparent in TTG, folks. We keep a trading journal on our website that actually tracks every single buy and every single sell that all of our moderators make. Goran, welcome to the TTG family. Goran, welcome to the TTG family. That is 27 laptops left, folks. 27 laptops left. Goran, welcome to the TTG family. All right. So like I said, folks, we are fully transparent in TTG. Oh, tablets. I'm sorry. What did I say? I said laptops, tablets. All right. We're fully transparent. So you guys can actually go to the site. You guys can see that. Okay, you guys can see all of our trading performance, all the wins, all the losses, all the break evens, all there for you to see how you would be performing had you been following along with all the trades that we were calling out in chat. Then you're getting access to one small private study group with one of our TGG mods. Okay, this will help you guys, you can ask questions, go over topics and lessons that you need help with. All right, then you've got the curriculum. Now, the curriculum is a simplified version of the stuff that I learned while I was working at the fund in New York. All right. And you get the entire curriculum. It's a 17-course curriculum that is broken up into beginner courses and foundation courses for those just getting started, but also advanced courses. There's also courses on options, swing trading, trader psychology, crypto, you name it, we've got it, all in text and video format, whichever is easier for you to learn. Then on top of the courses, we have that video library that I spoke about. The video library has over 100 hours of additional educational video content. Carmine, welcome to the TGD family, Carmine. 26 tablets left, folks. Carmine, welcome to the TGD family. 26 tablets left. So in that video library, I told you, there's that workshop I told you about earlier, right, on how to grow a small account. There's also a workshop right there, how to trade while working a full-time job. Just to name a few, guys. There's over 100 hours. Different workshops in that video library. That's on top of all the courses. And then, of course, you have access to our chat room. All right. Access to the chat room where you guys, me and the moderators and we share our screen with you during the day. We're live on the microphone, calling out opportunities where we see them. We're sending out real-time alerts. I tell you when I'm buying a stock before I actually buy it. And then once my order is filled, I will then alert that in real time. We're also, answering questions. You guys can send us DMs during the day and ask us questions. We're there with you the whole day. We're not gone after 2 hours and you're left to fend for yourself. The moderators and I are there for the entire day. All right, we're there for the entire day. Now, your next question should be, why do you offer all of that for just $12.90? And in order for me to answer that question, I'm actually going to ask you a question. Okay? I'm going to ask you a question. I want you to type the letter I in chat right now if you've ever been a part of another trading group You were promised the world only to feel like you were disappointed and felt like you were always just another $1,000 upsell away from reaching your goals. Type the letter I in chat right now if that's ever happened to you. Look at all these letter I's. Look at all these letter I's. Guys, this is why we do it. I started with $1,000 and it is up to almost 4K in 2 months with a full-time job, 60+ hours. Hell yeah, Joe. Joe, you're on fire, brother. Keep it up. Keep it up, Joe. Proud of you, man. Guys, you see all these letter I's that are coming through chat right now? This is why we do it. Okay? This is why we do it. Because it shouldn't be that way. It shouldn't be this difficult for people to get themselves an education and continuously feel like they're upsell. It's like, no, when you guys join the family, that's it. You join the TTG fam, that's it. You get every single thing that we have to offer for just one price. You know, we want to disrupt this entire industry. We really do. Also, folks, Weedapalooza is July 17th. Okay. Listen to me very carefully. Tonight is the last night for you to be able to attend Weedapalooza. Okay. Now, what is Weedapalooza? First, let me say that. Jason, the Wolf of Weed Street Spadafora, who is one of the moderators and partners of True Trading Group, who is one of, if not the best cannabis trader in the cannabis space. He is very well known for calling the bottoms and tops of the cannabis stock rallies and pullbacks. He's been written up in Forbes, Men's Journal, you know, a bunch of other, you know, TheStreet.com. I mean, he's been written up in a bunch of different publications. He is going to be doing a live workshop on July 17th, where he's going to be discussing the state of the marijuana market, the cannabis space, what he thinks these stocks are going to be doing in the months and years to come, his favorite picks. He's also going to have some special guests that are going to be some CEOs of some of the largest cannabis companies on the market today. He's also going to have some analysts attend the workshop, and also possibly some asset and money managers, some hedge fund traders and some hedge fund managers are going to be in there as well, talking about their cannabis positions, what they see in the markets, and what they're going to be doing. If you are interested in the cannabis sector at all, this is an absolute must-attend event. This is an opportunity for you guys to actually get yourselves some guidance, some mentorship, and some information that can help you build wealth over the next 5 to 10 years, because I am extremely bullish on the cannabis industry. My biggest holdings are Curaleaf and Green Thumb, just for full disclosure. I'm very, very bullish on the cannabis space. And if you are interested at all whatsoever or in that industry, this is an absolute must-attend event. Okay. The event is July 17th, but you must be a member of True Trading Group by midnight tonight in order to attend the Weedapalooza event. Okay, you must enter the coupon code TTG121. You must actually click apply code to get the 41% discount. And if you guys see on the screen right now, in your checkout cart, you see the tablet. If you get to the checkout cart and you see the tablet in your checkout, then that means you have secured one of the remaining 26 Android tablets that we have for tonight. If you get to your checkout cart and the tablet is not there, that means that we have sold out of all 26 of the tablets. Okay. So again, guys, you got to use coupon code TTG121. Now, I told you, we want to disrupt this entire industry, but at the same time, you've got to know your worth in life. And we know that our membership is worth way more than $12.90 with all the stuff that we give you included with the membership. So that's why we are moving the price of our membership to $2,500. Okay, we're going to be at that level sooner than you think. The price of our membership is going up tomorrow, and we'll continue to go up every day a little bit while we work our way up to $2,500. So that $12.90 price point tonight is literally your last night to get the 41% discount for the price jumps tomorrow. And we're going to continue to raise that price as we work our way to $2,500, which is still a fraction for the value that you're getting in your membership. Let me put things in perspective for you. because you can join right now for $12.90. Let's say you decided you don't want to join True Trading Group, but you want that Benzinga newsfeed. If you went to Benzinga tomorrow to sign up for that newsfeed, they're going to charge you $1,188 a year. Guys, that's almost your entire TTG membership in the cost of the Benzinga newsfeed alone. The full book level 2 from QuoteStream, that's $990 a year. That simulator is $750 a year. And TradingView, they charge $720 a year for their charting software. Just those 4 tools, which are all included with your membership. But if you bought them on your own, you're going to pay $3,648 a year for those products. All free with your membership, guys. I'm telling you, the price is going up by a couple bucks every day, guys. The price is going up tomorrow. We're going to be over 2K before you know it. That's still cheaper than our competition and giving you 10 times the value. We want to disrupt this industry. In order to do that, you got to provide insane value and results that is at a price substantially less than any of our so-called competitors. Folks, we were also 5-star rated on Trustpilot. I welcome, encourage, and invite all of you to go read the reviews on Trustpilot. 1,300 people have taken the time to leave us a review on Trustpilot. There is no greater referral than one of your peers, and I encourage you to go read them. Okay? Go read them, guys. 5-star rated on Trustpilot. And last but not least, what I would like to see right now, okay? What would the price be for the second year? Okay, Joe, great question. Joe says, what would the price be for the second year? Joe, great question. I'm glad you asked, because the price you pay today is the price you pay for life. So if you sign up and pay $12.90 today, next year when our membership is $2,500 and it comes time for you to renew your membership, and I'm confident you're going to want to renew because 80% of our members are successful and we've got about a 72% retention rate amongst our members. So I'm confident you're going to want to renew. So let's say when it comes time for you to renew, it's $2,500. You're not paying $2,500 to renew your membership. You will only pay $12.90, the same price that you would pay tonight to join the family. So you might be saving 40% tonight, but you might be saving 50% next year. Okay, so the price you pay today is the price. You're locking that pricing for life. So every time that your membership renews, you would pay $12.90 regardless of how high the price of the membership is at that time. All right? Guys, and listen, anyone else that is still on the fence about joining the family, I'm willing to offer you guys one more thing. And if you're on the fence, I think this is gonna help you make up your mind. Because I stand behind my program. I stand behind the education that we provide. And that is why I am willing to offer you a money-back guarantee. Allow me to explain. If you do not make your membership fee back, $1,290, if you don't make that back at least once during your membership, after completing all of our courses, passing the quizzes, and attend one private study group, if you do those 3 things and still don't make back your membership fee at least once, I will give you a full refund. I'm dead serious. Keith, welcome to the TTG family. 25 tablets left. Keith, welcome to the TTG family, brother. That is how much I stand behind my program. That's how much I put my money where my mouth is. Guys, if my members weren't making money, I wouldn't be able to offer you a money back guarantee. It's just that simple. It's just that simple. I'd be an idiot to offer you a money back guarantee if my members were all losing money. Okay? So you got to ask yourself, what's the worst scenario? You sign up, you get a free tablet. You don't make the $12.90 back, I give it back to you, but you still got a free Android tablet. What's best case scenario? You sign up, get a free Android tablet, you become a consistently profitable trader. What's the risk analysis on that trade? You going to pull the trigger on the trade, or are you going to hesitate? Are you going to allow the window of opportunity to open and close without acting, or are you going to take the trade? I know where myself, my teaching family are going to be tomorrow morning. Right in chat, in the trenches, seeing where we're going to be making money next week. The question is, where are you going to be? Get yourselves a professional education, folks. Learn this skill. Use the coupon code TTG121. Kevin, welcome to TTG family. Kevin, we got 24 tablets left, folks. Kevin, welcome to the TTG family. All right. So again, guys, coupon code TTG121. You get the 41% discount, brings the price all the way down to $12.90. That price goes up tomorrow at midnight Pacific tonight. That price goes up. Okay. That price goes up midnight tonight. And the next 24 people to use that coupon code get a brand new free Android tablet. Thanks for joining me tonight, guys. I hope this live stream was helpful to you. I hope you guys learned something. Make sure to subscribe to the channel if you haven't done so already. Share, smash the like button, turn on your notifications, share the stream on your own social media. Let's help as many retail traders as we possibly can. All right. Thanks a lot, folks. It's been a blast. Enjoy the rest of your night and get your butts in chat first thing tomorrow morning. Let's take on the week head on. Take it easy, guys. Everyone enjoy your night. I'll see you guys on chat tomorrow. Later, gang.